So now we're going to add more materials to a job in a job order costing system. Willie finished the body of the guitar and now needs to build the two necks of the double neck guitar as well as add the guitar strings. So on May 30th, Willie fills out a materials requisition form, which we saw earlier, to take $75 of wood and guitar strings out of the storeroom. So the computer system adds it to Job 70's job cost record by entering the date and entering the requisition number from the materials requisition form, as well as the $75 of additional wood. How does this look in the T accounts? Well, raw materials is lowered by $75, and that same $75 is added to Job 70 in the work in process inventory account. Notice Job 70 now has total accumulated costs of $375. Now the journal entry would be a debit to work in process for $75, and the credit account would be raw materials for $75. Now we need to add Willie's additional time of building the twin necks of the guitar and stringing the guitar. So on May 30th, Willie swipes his badge and $25 of direct labor gets added to the job cost record. In the T accounts, this means $25 is debited to Job 70 in the work in process inventory account. Now Job 70 has an accumulated cost of $400. Now the journal entry for recording Willie's wages wouldn't occur until the pay period ends, but if you're curious as to what the journal entry would be, here it is. We would debit work in process inventory like we did on the previous slide for $25. You're probably used to a payroll entry increasing an expense account, but remember that direct labor is a product cost, and product costs are not expensed until the product is actually sold. And when it's sold, the expense of the product cost is transferred to is cost of goods sold. Now for the credit account. Because Willie is not paid on the day the pay period ends, the credit account would be wages payable for $25. To keep the journal entry simple for our purposes, we are leaving out taxes and other deductions.